People think that raising private money in 2025 is difficult, requires connections, or requires credit. But what if I told you that in 2025, raising private money is as easy as ever? And that's exactly how I bought this house behind me. In this video, I'm going to show you the tips and tricks that countless investors use to secure private money without banks, credit, or connections. And stick around to the end because the last two things I'm going to share with you cost investors tons of money, and I don't want that to happen to you. So if you want to learn how to raise private money in 2025, this is the video for you. Come to the office. Okay. So before you can secure private money, you need to understand what private money is, right? So private money is exactly how it sounds, right? Money that is private. So it's money from anything that's not a bank. So it could be a friend, a grandparent, a parent, any family, other investors, you name it. As long as it's not coming from a bank, it's considered private money. One example might be your grandfather has $100,000 that he's sitting inside of a savings account, right? He's probably earning on that like 1 to 2% a year total, and he's afraid to invest or he doesn't know how to invest it. So that money is sitting inside of a savings account doing nothing. It's just dying. You coming in to say, hey, listen, grandpa, I have real estate opportunity. I would like to raise money for it. I need $40,000 and I'll give you 12% on your money. Someone hears $40,000 for 12% with a 6-month term. If you say $40,000 for 12% in over 6 months, that beats any index fund. It beats any bank. It beats any savings account. It beats any CD, 401k. It beats everything. Having the ability to have higher returns because you yield a higher profit is a great way to kind of structure a private money deal. And that's just one thing. So you could have another person that might have money to give you would be other investors, especially bigger investors. So say you secure a deal and you have somebody who maybe it fits one of your preferred investors' buy boxes or something like that. If you have a deal and you're like, hey, listen, I want to raise private money for this deal, there's going to be 3 things that might happen. They're either going to say no, they're either going to say, cool, I'll fund the deal and give you half of it. We'll just run the deal together. Or 3, they're going to give you the money for that return. Most investors, especially if they do real estate themselves, if you bring them a deal and they're extremely generous, he will take that deal and he'll split it with the wholesaler. So that means everyone's on title together. He runs it, he funds it, nothing goes out of the wholesaler's pocket, and they close at the end, they split profits evenly, whatever that might be. So why is this lucrative? It's lucrative because if an investor wants to fund your deal, you will now have flipping experience, which makes it for when you want to do a flip or renovate a house, now you can get much better rates and terms on your hard money loans. And hard money loans are fix and flip loans for investors. So having an investor partner with you on something and then have your name on it with them, even though they run the whole thing, now you have experience and now banks take you seriously. When you're a brand new flipper, banks usually don't take you seriously, which makes it really hard for people to get into the business and get into the game, because unless you have money out the ass to put down or you have somebody funding your entire entry, you're not going to get great rates on hard money if you're a brand new flipper. I don't care what anybody says, what any bank lender says out there, your rates are going to be higher. So if you have an investor who's willing to split profits with you, that's huge, and that's going to help you get your foot into the real estate investing journey much quicker. How can you utilize this information? Farm your circle, see who has money or maybe has some investing experience but isn't actively looking for opportunities or isn't actively in the market of investing, who has money but wants to invest. Target that. Ask them, hey, listen, I have a real estate deal. I need this amount of money and I'll give you this % return. Explain it to them, making sure it's very clear, make sure they understand how they're gonna get their money back, and make sure they're comfortable losing money, right? So basically how we structure with all our investors, we've yet to lose money, but if someone's giving you money, you don't want to be that guy to then take their money and then lose it, and it's not good. So you're gonna wanna be like, listen, this is the deal. This is how much I think we're gonna make. This is all the terms, everything. This is why I think we're gonna make this much. And then assess the risk tolerance. Be like, how comfortable are you with taking a loss on your money? And just say it. You can say it like that. Telling somebody, being very transparent and letting them know off the bat, hey, listen, this is an investment. There's always a risk. It's gonna make people want to invest in you. And that's how we have now got people knocking on our door to give us money and capital, because they know we're gonna make a return on their investment, and they know that we're very transparent. And I'll even call our investors when we're doing a project. Example, a house in Southington, the guy who gave us money for that, I'm giving him updates every single 3 weeks to a month to make sure he knows what his money's doing, where we're at, and when he'd expect to get that money back. Number 2 is building trust before you need the money. You don't want to get a deal under contract and then just go to a networking event or go to your uncle and be like, hey, I had this deal, I want X amount of money. You can do that, but usually if it's a family member and they trust you a little more and they know you're in real estate, you're doing X, Y, and Z, they're probably are going to trust you. But if it's with someone random, you meet somebody at a networking event, if you're like, hey, I have this deal and I need $40,000 $20,000, $50,000, I'll give you this much back. They don't know you. They're not going to trust you. They're not going to give you their money, despite the promises and the track record that you might have, right? You got to build a relationship with them. You got to make sure they're comfortable with you, you're comfortable with them, and they're going to be cool investing in you, because at the end of the day, it's not a loan, it's an investment. Make sure you're trustable. To become trustable, what you can do is actually what we do with our brand is we post a lot on social media. We post on TikTok, Instagram, all that good jazz, our YouTube, and we talk about real estate. We do more than real estate. We do marketing, we run our own ads, stuff like that, and that's what helps people trust us. They see we've been doing it for years. We've been established since 2021. I led a sales team that generated millions in income, so I put my story and everything out there so people can see it and then be like, wow, this guy knows what he's doing. He's been doing it for years. I can trust him. So what you can do to start utilizing some of these tips is you can start posting about real estate, start posting about your journey, even if you're just cold calling, even if you're looking for houses, driving for dollars, post about it. Let people know you're in real estate and you're trying to make a name for yourself, right? Start an LLC, get everything going, kind of brand yourself, because that's gonna make people want to trust you. Next, document your journey. So don't just post, but document. Talk about everything you're doing in the business. This helps you skip the line pretty much of needing to explain ourselves a million times over. When you document your journey and you start telling your story and having people kind of relate to you and be like, yo, this kid really wants it. He has a plan, he has a mission. If you can get somebody to say, I want to be a part of this person in their journey, then raising money is the easiest thing you'd ever do. And last but not least, have a conversation before you ask for money. Make sure they know you, make sure they trust you, make sure they're comfortable giving you as much money as you need. That way it's not an awkward conversation and they don't feel like you're trying to pressure them to give you money when you already have a deal under contract. Now, before I get into the next step of raising private money, make sure you hit the like button and subscribe. It really helps our channel and it'll really help you raise more money in 2025. So now you know who to talk to, kind of what to say, and now you know that you need to build trust before you raise any sort of money. Now we need to talk about how to structure your deals when you have private money. So there's two things you can do. So you can either offer a return on their investment, which is a return on the capital they give you, or you can offer equity inside of the deal. We personally don't offer equity as much because it cuts into your profits a lot more. I love offering returns on investments, especially because we're at a point now where we've built the track record and now people kind of see like, okay, they're gonna do this and this is usually their turnaround time and this is how much we're gonna expect to make. So it's a lot easier when we explain to our investors, hey, we have this deal. I want $50,000 for 6 months to 8 months on fix this project, all that kind of jazz. It makes life a lot easier. We have the credibility. If you're just starting out, you might have somebody who wants to take equity of the deal. Taking equity of the deal means that they might give you the money for it, but they might want to take 60% of the deal and give you 40%. Or maybe they'll want to split it with you. If you're newer and somebody wants equity in the deal and they don't know you or it's your first flip, they might take the majority of the deal and then give you maybe like 30, 40%. But if you're starting off, that 40% of a pie is better than no percent of a pie. The only time we do equity is if longer term hold. We usually, if we have an opportunity for maybe something that's 10 plus units, then we'll try and raise money for equity. We're looking at it in terms of a long-term cash flow play and appreciation, and we're trying to buy something that's a little bit under market because it needs value add. That way we can have forced equity once we go ahead and buy it, do it, and then refinance it, that we could pull out the capital and then give it to our investor who still has part of the deal, but now everything's kind of profitable for everybody. So long-term equity plays are really good and really helpful, especially if you don't mind having partners on your long-term holds. But having the ability to kind of like control the asset makes us feel more comfortable, and I won't personally do a deal if we don't have control over the asset because it just kind of goes against our business, and we like to make the decisions that we feel are going to push everything forward and make everything a little streamlined. Another thing you can do is you can give somebody first position. They're basically a lien on the deed, which means if you default, they now get ownership of that property. Make sure you're crystal clear about repayment terms, rather you're doing it through a loan or rather you're giving equity in the deal. Make sure everything is super laid out, thought out, everything is on paper and reviewed thoroughly. That way you don't get into a position where somebody says, oh, he said this or she said that. We don't want to play he said, she said, especially when there's a lot of money involved. They get, no matter who it is, when money's involved, people get sticky. You're gonna want to make sure you get everything in writing, everything documented. That way there's no issues. Don't go back and say they said something when they already signed it. All right, so we've covered some very powerful tactics so far, but these last two things are where people usually mess up and they can end up costing them, either it be money or relationships. So let's dive into the next thing, and that is pitching the deal the correct way. So you want to be so transparent with what's going on, kind of like what I just said. So a lot of investors will overcomplicate their plan for whatever it is, especially when they're new. They'll overcomplicate it, they'll pitch it, they don't sound confident, and that kills people from wanting to invest in you. So you want to be cool, calm, and collected. You want to be confident. You want to know your numbers. You want to make sure you explain it thoroughly. So you should be able to explain the deal in 2 to 3 minutes. So listen, if I'm buying something for $200,000, this is what you would say to your lender. You say, hey, listen, I got a deal for $200,000. We need $40,000 to enter. It needs about $50,000 worth of repairs. And I think the deal is going to be worth $375,000, $400,000 when it's done. There's enough meat on that bone for an investor to say, okay, in their head, that's not a bad deal. What are the terms? Terms, I'm off for the $40,000 to enter the deal. I'm offering 12% and 3 points. So a point is basically 1% of the loan value. Usually, sometimes at closing, people will pay points to their private private lenders. Banks charge points, and that's just so they can get money back once you buy. Private money lenders sometimes do that too. So maybe you want to offer that, they just get an extra 3% points up front. It depends on how you want to structure the deal. Make sure you're very clear cut with it. But usually I try and just offer interest and not any equity or points, because obviously I want to protect us, but also make sure I'm making my investors a good amount of money. Okay, step number 5. And I thank you for staying this long with me in the video. And this is going to be arguably the most important step, because if you can't do this step, you're not going to keep making money in this business. You're not going to keep raising money. So last but not least is keeping your private money lenders for life. Keeping them is the real key to wealth. So having people want to continuously give you money back to back, and then building a pipeline of people who want to keep giving you money is going to change your game. You want to follow up with people, tell them what's going on with the projects, pay on time or early. If you can get a project done in 4 months and it's done in 2 months, on the market in a month, sold in a month, perfect, right? If you can pay somebody back early and they get their money early, it'll be like, oh shit, Nick just paid me $2,400 and he said he's gonna give it to me in 6 months, and he said he gave it to me in 4 months. I want to invest with him again. So the more you make people money, the further you go with them, the more they're gonna want to give you money, and the more money they're gonna want to give you, because you're gonna give them bigger returns. So eventually you're gonna get to a point where you don't even need a hard money lender to buy a flip. You can have somebody fund your whole deal for you, purchase and rehab costs, and then just take a bigger chunk at the end, because it's still gonna be cheaper for you than hard money. And last but not least is showing results. So showing people results in anything in life is gold. You want people to trust you. You want people to believe that you can do it. But showing people that you can make the money, and then making the money time and time again, it's a gold mine, right? Using other people's money for real estate is going to help you skyrocket, and it's going to help you get ahead of 9 out of 10 people who don't know how to raise money. So take these tips, keep your lenders happy, and I promise you, you will go so far in this business. So that's about it for me. If you like this video and you want to see more, make sure you hit the thumbs up, subscribe, drop a comment if you have any questions about raising private money. If you are new to wholesaling, or maybe some of these terms for you didn't make any sense whatsoever when I'm saying wholesaler or hard money, click this video. It's a full masterclass that teaches you everything that I know about wholesaling. That means from how to find sellers, how to negotiate deals, how to find contracts, everything you possibly need. Thank you again for joining me, and I look forward to seeing you in the next video.